All right, everybody, welcome. Doug McKay, antiwallstreetguy.com on the 25th of February. And let's take a look, starting out with the Dow. Dow closed today at 12,130. We did put out a post on the blog on the 22nd that said it looked like the Dow was headed towards 12,000. And that was on this day. And then eventually yesterday, Thursday, we did actually trade intraday below 12,000 at 11,983. We bounced off that area of support, so if we can bring up this support line here, we did hold 12,000, but we have broken the trend line on a daily chart. Now, the overall trend right now is still long. I would be concerned if two things happen, and we'll get rid of these lines here again to clean it up a little bit. One, if we break yesterday's low of 11,983, I would definitely sit up in my seat. And then certainly if we broke the 50-day moving average, which is this line right here, which is roughly almost exactly between 11,750 and 12,000, which would put us at 11,875. So we want to make sure that we hold on a close 11,875. Provided we trade above 12,000, the market remains in good shape in terms of the Dow. Now, also what could be happening here is the shorts could be covering and buying back their positions here, or just playing a bounce if somebody was willing to trade this in here. So we could always come back up and run up against this trend line and go lower. So we'll keep an eye on it next week, but this was clearly an interesting week for the market. You can see we had an increase in volume as the market was coming down. All right, so that's a look at the Dow. Overall, the trend is up. If we break 12,000, I would be concerned. 11,875, I would be out. All right, let's take a look at the S&P. Very similar chart. Again, let's take this trend line here. And you can see that we broke that trend line on a daily chart where the candles represent days. Very similar to the Dow, where support on the Dow was 12,000. Support on the S&P is 1,300. We traded below that yesterday. We got as low as 1294 on the 24th. If we were to close below this low of Thursday of 1294, I would definitely be concerned. Again, we could be running right up to this trend line, and then we could be heading down again, or this could just be inside of a channel where we hit the lower end of the channel and we're going higher. We're going through 1340. If we get above 1340, that's a very, very bullish sign. Right now, the overall trend, we're above the 50-day. We're still within this channel. We held 1300. The overall trend is long, very similar to the Dow. Let's take a look at the NASDAQ, COMPQ. Very similar. This chart went out 2 days ago. The NAS just closed above that day, which was Wednesday the 23rd, above the 50-day moving average. We did break the trend line on higher volume. We're still above the 50-day moving average. If we were to break this low, let's just call it 2,700, I would be taking any positions tied to the Qs or the NASDAQ. Actually, let's take a look at the Qs. NASDAQ 100. If we were to break this area of 56, I would definitely be out of the Qs. It's quite possible that we're going to go up and fill this gap here. It looks good above 58.80, looks bad below 56. So we're kind of in that trading range. We'll see what happens next week. Let's also take a look at bonds, because everything up right now in terms of the trend is long. Now, in terms of bonds, we're above the 50-day. We might have turned the corner here. Interest rates are dropping this week, so anything tied to treasuries is going up. This is the IEF ETF. When we look at this on a weekly basis, we can see that we caught support here. You see this area of support where my crosshairs are? We hit that basically to the tick. We bounced off of that. If you were long term, you'd wait till we got above 94, maybe 94.20. But playing this bounce here where we're at 93.41, I would have my stop right here, about 4 ticks under the low back on 211. So you'd be just under 91 on that. We did put a chart up yesterday of the TLT. This is the chart we put up yesterday, again, where we caught support, double bottom, if you will. We're going to bounce off that, which we did. We did break above this downward sloping trend line. Again, that's a signal that we could go higher, continue to go higher, meaning lower interest rates. But again, we'll see. This is a pretty tight trade percentage-wise, from 92 back basically around 88. So I don't believe it's too late to get into this trade at all. But again, as always, we want to cut the losers short and quick. If we break below this low, we want out of TLT. As far as gold, let's take a look at gold. Now, initially, we didn't want any. This is looking at it on a weekly chart. We didn't want anything to do with gold until we got above 139, and then we changed our posture there. If you still want to wait till we get above 139, that's fine on GLD, because there's still a possibility that we're going to top here. We topped here, 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 like we said last week. We're looking at a daily chart. I would feel more comfortable if we got above the 223 high, the 223 high, which was Wednesday, and that was 138.20 on a close. Let's just call it 138. So if we get above this short-term area of resistance, if you haven't pulled the trigger yet on gold, I would do it. We could stop again at 139. We're certainly going to probably see some selling there. Hopefully we won't back off too much, and then we'll shoot through it again. If it all blows apart, from a percentage standpoint, we're back here at around 132 and change. Now silver, but again though, we can say that the overall trend here is kind of mixed. We're above the 50-day. We came off the bottom, but more confirmation would be above 139, but I think it's definitely worth putting a trade on here in GLD. I think a better looking chart, like we talked about last week, was silver. I did put stops on this of 31.07. After I saw this come down yesterday, I waited for the close. Yesterday the close was actually 31.20, and then today we opened up higher. Today we opened at 32.10, so we're kind of right in here, 31.07 for our stop. This is a good looking chart, especially if we get above, let's draw this in here, especially if we get above this area right here. If we get above 32.75, that's good. And then yesterday, the high that was put in on Thursday was 32.62. We get above that, then we're probably gonna move our stop up even tighter. But for right now, we have our stop roughly, I believe, about 5% above our entry. So we definitely have a profit locked in there. So gold looks good, silver looks good, bonds playing a bounce look good. Make sure you have a stop there. Again, equities, if we look at the Dow, we could be bouncing to the underbelly of this trend line and roll over again. Again, I'd be concerned if we broke 12, certainly the low that we put in on a close. If we were to break on a close below the low we put in on Thursday of 11,983, I would be concerned. We did test and hold 12,000. On the S&P, if we break 1,300, I think the next stop would be 1280, which would be support here and just below the 50-day moving average. All right, you guys, the overall trend, long in metals, long for now in bonds, long in energy, and obviously long in equities. That could change next week. We'll see you next week. Thanks. This is Doug McKay, antiwallstreetguy.com on the 25th.